Hi, this is Peter Hans, and welcome to this week's episode of Between Two Chains. Today, I'm joined by CEO and co-founder of Upshot, Nick Emmons. Upshot's a really interesting company, and I think you'll find this discussion fascinating. It's a financial data platform in the NFT industry focused on appraisals and the intersection between NFTs and DeFi. We talk about a wide variety of topics from what NFTs represent to where the market is going to liquidity and what makes a good project and a good community. And we also talk about some pretty interesting concepts like the equivalent of a FICO score for wallets within the NFT ecosystem. I absolutely love this conversation with Nick. I think Upshot is a really interesting company, and I hope you all enjoy it too. Thanks so much.
This commentary is not intended to be investment advice, investment research, or recommendation. Please consult your investment professional for your own circumstances.
Hi, this is Peter Hans, and welcome to this week's episode of Between Two Chains. I am joined today by Nick Emmons, the CEO and co-founder of Upshot, which is a really interesting platform. It's a financial data, as I would describe it, a financial data platform looking at the NFT market and essentially NFT appraisals, which I find interesting. They have credit scores of different wallets and portfolios, essentially. A lot of robust data built into the platform. And then there's a few topics that I really want Nick to dig into, talking about essentially the financialization of NFTs and how NFTs intersects with DeFi. So should be a good one. Nick, welcome. Excited to talk to you.
Yeah, thanks for having me. Yeah, excited to chat today.
Absolutely. And you guys have done some pretty good fundraising rounds from high profile investors, which is always great to see as well. Adds a lot of legitimacy to what you're doing. Not that it necessarily needs that, but definitely exciting. So, why don't you start off just by talking a little bit about your background, introducing yourself, and then assuming I didn't completely butcher what Upshot is, how you would describe the platform and what you guys do.
Sure, sure. No, you didn't butcher it. That was a good description. I guess just a quick background on myself. Prior to Upshot, I was leading blockchain development at John Hancock and Manulife, large asset manager,
Perfect.
insurance
Yep.
company, and we were doing a bunch of research around kind of decentralized insurance systems and how to build out kind of various insurance functions in a decentralized context or a decentralized environment. Um, and that led to a lot of the like I guess like areas of research I became interested in after leaving John Hancock, particularly around this new field of mechanism design called peer prediction, which focuses on mechanisms that incentivize actors in decentralized environments to answer subjective questions honestly. This is at the core of a lot of the insurance problem. Actuarial
Hmm.
kind of sciences are subjective when in the context of larger portfolios. Non-parametric claim verification is highly subjective. And if we were to build out these kind of robust insurance systems on decentralized blockchains, we need mechanisms that reward people for providing honest and informed responses to subjective questions. And in pursuing that area of research and thinking through these problems in the context of insurance, it quickly became clear that these types of mechanisms had applicability outside of insurance. They can be used for kind of general Oracle solutions. They can be used as a means of pricing illiquid, non-fungible assets, which is what we actually ended up pursuing on the back of this research, and that's what led to a lot of like what Upshot is today. Upshot started as a sort of crowdsourced NFT appraisal platform and has since morphed into having its appraisals. Our appraisals derived much more from ML powered algorithms and models that price these things at scale on a very frequent basis, and then more broadly expanding into a kind of comprehensive interpretation layer for NFT financial markets in general, for kind of furthering the expressiveness and what NFT financial markets can support. So we can
Mhm.
get deeper into a lot of that, but that's a little bit on the background.
Yeah, no, that's great. I find the appraisal part very interesting, and frankly, I've have I guess as much experience as one might have in machine learning for financial markets, and it's tough, right? It's very, very difficult to have a clean and large enough data set, and then consistently backtest. And I thought it was interesting because the NFT market is still very young and nascent. So, when you think about the data set that you have, how do you think it's enough right now? And do you think the data is clean that you can really have like accurate appraisals in relatively real time?
Yeah, we put in a lot of work to make our data set as clean as possible and as useful as possible, given kind of how nascent this space is and how sparse the data sets are as a result. We're pretty rigid about how we test the accuracy of these models as well, doing kind of out of
Hmm.
sample kind of assessments over longer time periods against real market data that's happening, and seeing how our models or how our price predictions stack up against what's actually happening in the market. Again, these are sparse data sets as you've referenced, so things are imperfect, but we've been able to tout quite accurate models at scale, which has been a kind of promising achievement. And now, as we're expanding our data set with more kind of off-chain data, of which like where data exists in more abundance, and improving our kind of pre-processing or data processing pipelines to make this increased consumption or kind of scale of data that we're pulling in more reliable and easier to deal with. I think we'll continue to see that same kind of improvement or level of improvement in the model's accuracy. So it's
Sure.
early days, but we've
Yeah,
seen promising early results.
that's good. I mean, you have to start somewhere, right? And
Hmm.
you can only do as much as the data that you have. But of course, it should, as you mentioned, improve significantly over time. As you think about appraisal data for NFT ecosystem, and obviously that can mean a lot of things. But let's just assume we're talking about kind of the more like blue chip liquid NFTs that are less likely to have kind of wider scale uh, manipulation, and not necessarily in a negative way, but it could be wash sales for blur tokens or something like that. But what how do you think about the appraisals from a timeline standpoint in terms of real time snapshot today versus this asset might be intrinsically undervalued, or the floor might be low based on where similar NFTs are trading, right? Because you can look, and there could be fairly significant volatility following just the macro or ETH
Hmm.
prices or things like that. So how do you think about the predictive nature versus real time?
Yeah, so we've poured a bit of energy into the kind of like predictive power of the models, as well as we've started to kind of move up the financial stack and pursuing more things around lending and similar types of financial applications. And lending especially, it's important to be able to say, what am I going to be able to get for this NFT 15 days from now, 30 days from now? And there's a
Mm-hmm.
lot you can glean from a lot of what you're talking about in sort of correlated sectors of the NFT space or correlated collections, volatility historically with a bias towards recency, and trying to use kind of the volatility dynamics of the space to see both directionally and as a matter of scale, sort of where prices will be in the future. And also we're starting to experiment with some historically useful leading indicators in traditional financial markets around things like social sentiment, and observing this kind of social data in conjunction with the market-based data that goes into the models to further kind of reinforce the predictive power of these models. We've seen some promising results. I think with regard to kind of predictive appraisals or recovery rates in the context of them being used in lending, it's still fairly early days, but we're using these things to sort of make sense and model the lending space as it pertains to NFTs to date, and it seems kind of promising. So we'll see how it goes.
What do you see? Because I noticed lending on your platform is something that you guys will be launching, which
Hmm.
from a financialization standpoint makes a lot of sense, right? People have assets that are you can currently put to more productive use. But what do you see as the primary use case of that, leverage that NFT holders would be taking on? Is it to, reinvest in ETH in the market? Is it to lever up and buy more pudgy penguins, or are you seeing other kind of more real life use cases? I guess you haven't
Yeah,
launched it yet, but what is your expectation?
yeah, I think there is some levering going on with lending. I think the more prominent use case for lending right now is actually as a sort of option to hedge against the downside of your NFTs. You take out a loan against your NFT. That loan, that credit line that you're taking out against it, is essentially your kind of price that the option may be exercised at sometime in the future. So if the NFT drops below that value, then you essentially don't pay back the loan. And this slightly changes the problem that lenders have to process on the lending side. It now becomes less so a traditional lending problem where we have to attempt to model the likelihood that someone is going to pay back their loan as some function of their previous default rate and other factors like that, and it becomes more of an options pricing problem and saying what is the likelihood this price is going to dip below this, because if it does dip below this, they're not going to pay back their loan. They're using it as an option, and as such the lenders need to interact with these vehicles as if they're options as well. And so I think that has been the most prominent use case of lending to date. And it's a powerful use case because prior to lending sort of achieving the scale or the level of adoption that it has, people could only enter long positions in NFTs, and this significantly restricted the kind of capital that could viably enter the space. Without kind of robust hedging vehicles, the space or kind of the kind of a level of attractiveness of the NFT space is significantly dampened as well.
Interesting. Yeah, I mean, I was going to say off the bat that creates a a pretty adverse selection bias for the lender. But as long as they're in essence underwriting it as a put, to your point, I would imagine you have a pretty high, low LTV on that loan, right? If that's the case,
Yeah, there's
like you have
ways.
to be.
Yeah. The LTVs turn out to, I mean, they're low, right, because these are illiquid assets, and they can move quite quickly, and so you have to make sure that you're hedged appropriately or that you're managing risk appropriately. But it's usable LTV, I'd say that
Yeah.
is kind of being spun out from these lines of credit or these loans. So
Well, yeah, and it's probably a good segue into a concept that you talk about in called essentially financialization of NFTs,
mhm.
and before we get there, what we talk about a fair amount about NFTs professionally, and certainly on this podcast, and kind of the way I always have continue to look at it is it's essentially a wrapper, right? The NFT is essentially a structure or a technology that you put around any sort of asset, and that asset could be something that's physical ownership. It could be a right to something. It could be a cash flow. It could be a JPEG. It could be tons of different things,
Mhm.
right? Some of which are more about the utility than the financial value. But so I guess two parts is one, like how do you look at NFTs in the NFT market, and then share a little bit about this concept of financialization of NFTs, and how you see them colliding.
Yeah, so I think that was well put. That NFTs um, are a means of essentially representing anything and bringing it on chain, and it's important or it's powerful being on chain because what the chain represents is this highly composable environment with permissionlessly composable primitives that can be combined in various ways to create kind of arbitrarily complex or expressive financial systems. And so combining that composability, the sort of like the nature of that environment with the seemingly infinite expressiveness of NFTs, you can start to imagine some pretty exotic and expressive financial systems and primitives begin to emerge when you're able to combine these things reliably. And it's been our thesis from the beginning that the main sort of blocker or bottleneck to NFTs being able to reliably interact with DeFi and this composable financial environment is that of liquidity. And so that's what we've tried to solve first is let's create reliable price discovery mechanisms for NFTs that are more efficient than open market mechanisms that sort of circumvent the restrictions of kind of that low velocity or other types of attributes that NFTs possess impose on the viability on these market-based mechanisms. And then with that price discovery mechanism, we can start to realize this design space that begins to emerge at the intersection. And so I think we're entering this sort of exploration phase that is picking up in speed of what the intersection of DeFi and NFTs can look like. We're starting to explore what obviously lending can look like, what perpetual systems or synthetic instruments can look like, what spot market or AMM systems can look like around NFTs. And we're seeing the early kind of stages of building out that base financial infrastructure. And what's important to note is that this financial infrastructure's use is quite general. It can apply to kind of any NFT as NFTs representation or the types of assets that are represented as NFTs expand. But to date, the NFTs that have adoption, that have capital behind them are kind of the PFP generative art NFTs. And so we'll see a lot of these financial primitives begin to come online with those as the kind of core asset backing them. And then as that financial infrastructure reaches some level of maturity, we'll begin to see the assets that are represented as NFTs expand to fill in more of the kind of diverse scope of what those things can be. I think there's a number of bottlenecks before more natively financial assets can be brought online as NFTs, real world assets being one, but just additionally kind of crypto native or on-chain financial assets will begin to come online as NFTs, and in sort of the next stage of NFT financialization will integrate with the financial foundation that's being built right now around NFTs, if that makes sense.
So in your mind, financialization, it does make sense. It is really about, I think if I had to summarize, I think two main qualities or two main factors. There's the price discovery and liquidity, which in essence creates a more efficient market. But to your point, right now, a lot of the more liquid markets are, generative art PFPs, where there could be more price discovery, but it's still, as I look at it, like so much of it is built around a narrative of like, what's a CryptoPunk worth or what's a Bored Ape worth. I don't know. I guess what the next person is willing to pay for it. So is your thought that in essence, with more data behind it, the price discovery becomes less subjective narrative based and more objective narrative based, or do you look at it more as this is just kind of where we are in the stage right now, and over time, as the NFT ecosystem grows, there are going to be things that probably are a little easier to price, or I guess less subjective to price?
Yeah, subjectivity is a piece of it. I don't think subjectivity is sort of like the main bottleneck before NFTs are able to become a more mature financial
Sure.
instrument or class of financial assets. I think it's kind of plainly the absence of those reliable price feeds, those price discovery mechanisms that block a lot of the more interesting kind of derivative markets or derivative instruments to be built on top of these NFTs. NFTs just aren't compatible with the spot markets as they exist in their sort of like vanilla form, and it takes considerable movement or subsidies or a significantly larger number of actors and capital in the space before spot markets and traditional market mechanisms can reliably price these things. And so I think by moving down this path of price discovery mechanisms that are sort of independent of spot market action and independent of transfers of ownership as the main vehicle of price discovery, will enable these derivative markets to exist even as spot markets take a while to be stood up. I think synthetic representation and synthetic exposure to NFTs will be a significantly larger market than the holding of these base assets and the price discovery of the base assets themselves on these spot markets. And that is what will allow the NFT space to expand and mature beyond the kind of primitive financial status it has today.
How do you, what kind of role do you see, and I'm interested, especially given your time at Hancock, how do you see kind of any of the legacy financial players, big money center banks or large insurance companies as they, look to get involved more and more in blockchain implementation? Do you see them getting involved in the financialization of NFTs specifically?
I think what will end up happening is there will be quite a large number of new markets that begin to emerge
Yep.
when we have these new types of market interactions, and when new markets kind of take form on the backs of a lot of the financial infrastructure we're building today, and the sort of operating model, the cost model of operating of the kind of existing legacy institutions is not viable for them entering these new markets. And for them to enter these new markets, which will be much more niche, much more tightly scoped, they'll need to adapt to the kind of mechanisms that are more inherently compatible with those new markets. They can operate in large markets. They can own the large insurance markets or financial markets that they've operated in to date. But as these markets are kind of smaller in nature and more abundant from a unit count perspective, they'll need to adapt to more efficient operating models, of which decentralization enables by more kind of tightly scoping or focusing the parts of the stack that they need to be competent in, that they need to be best in class in, if that makes sense.
It does, absolutely. I'm curious what you think we talked about some things that you don't think are kind of large blockers to larger adoption. What do you think are the significant blockers right now to more large scale adoption?
Yeah, there's obviously a bunch of sort of regulatory or legal hurdles when you
Sure.
start to integrate with the broader financial system. We've had this kind of fun playground or sandbox to date in having generative art and PFPs be the input or be the assets that we're building this financial infrastructure around. But things will get much more serious and much more slow moving as we start to onboard the assets that are traditionally seen in financial systems. So that's definitely a significant blocker. I see sort of the ability for these derivative markets to scale being a blocker as well. We've seen some interesting experiments and interesting and promising progress in the building out of these kind of more expressive financial primitives for NFTs. But in their current form, they are restricted to a certain scale. And scaling the sort of liquidity or the capital that can be supported or viably deployed in these derivative markets is not a trivial problem to solve. And so I think we'll go through several iterations of sort of mechanism design in these financial primitives before they can scale to the size that is kind of interesting and representative of the scale of the broader financial system. So it's those two things. I think legal, regulatory, and then just mechanism design in itself is still in the early innings.
Do you see and this is, I think, a broader problem with crypto and digital assets, certainly not unique to NFTs, but do you see a lot of the custodial questions coming into play when you think about legal and regulatory? 'Cause in my mind, that's kind of the big one. But I
Yeah.
wonder if NFTs are a little bit of a different asset.
Yeah, no, for sure. I think the custodial problem is a very real problem when it comes to NFTs. These things are non-fungible, and so you run into more nuanced or more specific problems around custodianship. It's not like you have a pool of fungible tokens you can move around any way you see fit. These things, when I put in a specific NFT, I expect to get my NFT back, and so it restricts the types of flexibility that custodians may have had or may have in kind of fungible markets. But
Yep.
I think it's also in sort of tokenizing real world assets that I'm referring to as being a difficult thing to get past from a legal perspective.
That's certainly true. Yeah, no, absolutely.
Yeah.
How big of a market in the NFT space, and maybe you don't even think about it necessarily as NFTs, but um, because I didn't originally, but I think more and more the tokenization of rewards programs and things like airline miles to Starbucks points is going to be looked at more, at least in the medium term, as kind of an NFT play than it will be as a token play, or a
Hmm.
fungible token play. And wondering what you think about that type of market, because that is something that I think could be um, you know pretty explosive from a growth standpoint if we start to talk about putting airline miles and Starbucks points and rewards points on chain.
Yeah, I agree. It's definitely it has the potential to be huge and really interesting. I think it's going to come down to the execution details from these different providers. If Starbucks moves their points on chain and they're restricted in the same way Starbucks points are restricted within their kind of database, it becomes less interesting. It's just a less efficient
Agreed.
database for keeping track of those points. If
Yep.
they are to sort of fully embrace the crypto nativeness of those points, where I can say take out a loan against my Starbucks points or lever against my Starbucks points, then it becomes much more interesting. So I think it becomes a question of how these brands bring these various programs, loyalty programs, etc., on chain as or online as NFTs, and if they do it in a crypto native way or in a way that is just trying to kind of borrow from the buzz of NFTs at some point in the cycle.
Yeah, I think it's a very, I don't want to say circular argument, because I don't think it's an argument, but it all does come back to the regulatory aspect of it. Because if you
Yeah.
come back and Starbucks can, in essence, issue a truly tokenized reward point that can be sold or exchanged or transferred, right? Then and then Starbucks can basically just issue more tokens, right?
Hmm.
And in essence sell them at the market. Then how does that fit into securities? Or it just opens up a can of worms that we're just really not there yet,
Yeah.
fortunately or unfortunately. So you have one concept that I thought was really cool, and looked up a couple of my own wallets on it too, which was fun. But you call it GMI, and I looked at it as akin to, you're looking at a wallet and you're looking at their FICO or their credit score, or and I think it's for the purposes of entering into lending transactions, but it could probably be for a number of things, right? Scamming is a big problem in NFTs right now. Like, how is this a real person, or is this a scam account? So explain to me kind of GMI, I guess, even the acronym, and
Hmm.
how you see it being used, because I think it is pretty novel.
Sure. Yeah. So GMI is a kind of like a popular acronym in the crypto space. It means gonna make it. It's
Oh,
used
okay, yeah.
as like part of WAGMI, which is we're all gonna make it,
Yeah.
and NGMI, which means not gonna make it. So we thought it'd be kind of a fun name to give this sort of wallet score, which is attempting to predict sort of how likely different wallets are going to make it in the NFT space based on their historical performance in interacting with NFT markets. So we take into a bunch of different factors and try to produce a score between 0 to 1,000 as to how likely you are to make it. And initially, this was built as a sort of additional input into our models to like further bolster the predictive power, but also just in the moment accuracy of appraisals. If different collections have smarter holders, you could start to draw some pretty interesting conclusions around the direction of prices for a given collection. And so that's a lot of what GMI was built for initially, and it ends up being fairly useful in thinking about lending use cases and other financial use cases. And it starts to open the door for even more kind of interesting financial primitives to be built on the back of one's ability to interact with NFT markets successfully. You could think of turning GMI into a sort of synthetic asset and letting people kind of trade on the backs of others' wallets' trading performance or kind of performance in making money in the NFT space versus not. And so it starts sort of like begins to outline this interesting design space that you can explore when you create more robust analytical tools for making sense of wallets and holder communities and stuff like that.
So it all does come back to the financialization of the NFT market. That the goal of this market is to trade and to you know essentially be profitable. Not that I think
Yeah.
people are trying to lose money, but
Hmm.
there are yeah. But that's definitely interesting. How do you think about any kind of like gray market transactions, things that happen outside of a Blur, an OpenSea, because certainly fees and royalties can be high, and I
Yeah.
don't know the how what percentage of total volume is in kind of gray markets, but
Hmm.
it's obviously tough to track. Is that something you guys look at all, or?
Yeah, it's tough to track. I mean, yeah, I do a fair share of my NFT trading OTC and outside
Sure.
of the kind of like purview of what on-chain analytics would let us observe. So it's a tricky thing. We've been trying to do some more in-depth network analytics to assist in identifying when these OTC trades are happening versus when someone's just transferring NFTs amongst wallets they own. And we're getting a bit better at it, but it's not a perfect science. I don't think it ever will be. You need sort of the voluntary kind of elicitation of that information before you can like consider a solution kind of robust. It's only known between those two buyers essentially, or those
Sure, yeah,
buyer and
because
seller.
then you never know what's a transfer to another wallet, and I mean you could look at if a wallet exchanges with another wallet ETH for an NFT, that becomes
Hmm.
relatively straightforward, but you don't know what other assets were behind that, or if someone sent PayPal or something like that. So yeah, there's yeah, it's definitely
Exactly.
opaque.
Yeah, and from our observations, again, not a perfect science, but it seems that that is a fairly small percentage of NFT trading in the whole. So it doesn't actually affect the accuracy or the kind of reliability of the models that much, but it is definitely a consideration.
Yeah, that would be my assumption
Yeah.
as well, that it's a smaller percentage of volume.
Hmm.
Um, Interesting.
Yeah,
Okay,
especially with all the
so
Blur farming going on, people want to do all of their trading via Blur.
well, and that's a good question as well. Like how much do you think all of that adds to kind of the noise in data,
Hmm.
wash sales and people just moving things around to get the token. I would imagine it'll all even out if, season two is underwhelming, or you're
Hmm.
spending more on transactions than you are getting in the token.
Yeah, yeah, it's something we've been tracking kind of loosely, but we've been just taking in the information as it exists and viewing kind of Blur interactions as the kind of state of the NFT market right now. And what happens there is representative of the state of that market. I think subsidies have a meaningful impact on how people make sense of various markets, and this is no different. And so if we're going to produce reliable and accurate appraisals, then we have to sort of see the NFT world through the lens of these farmers as well, which means taking
Hmm.
some of that information at face value. There's some processing that happens on it, but a lot of it is just kind of taking it at face value.
Makes sense. It does make sense. I think you talked at the very beginning about your background in looking at, in essence, what is game theory, right? Decision making based on incentives, and you had a kind of subjective nature of questions being asked in incentives. So, and I think incentives plays a lot into NFT ecosystems, right? Whether buying to pair with some asset for an airdrop, or holding periods. Um, this might be a little more micro, but when you look at various NFT projects, how do you look at do you spend a lot of time looking at the incentive structures, or what the utility may or may not be, and if that utility is valuable or not?
Yeah, the utility in the sense that, or I guess like the utility in the sense of various mechanisms that have seen success in the NFT market to date are meaningful to look at, and that utility is largely around promise of future assets that have value being delivered to holders. I think there's very little kind of tangible utility that has a meaningful impact on how people interact with NFT markets outside of that. So there are exceptions to this rule. I think some of the Wolf game stuff has changed this. Some more of the gaming NFTs are starting to
Hmm.
change the sort of scope or the diversity of utility that can be embedded in these things. But yeah, if there is a promise of a future airdrop, that level of utility in the sense that by holding the NFT, you're going to receive this asset that does have value, impacts the models a bit. I think just in a broader sense, doing a higher level observation or analysis around the holders of a given collection and the communities that form in various collections is one of the more meaningful influences for kind of modeling price. NFTs, especially in their kind of PFP generative art form, are experiments in online community building and online identity. And as a result, the sort of composition of that community, the composition of those holders, is one of the more important things to look at rather than kind of explicitly defined utility or things like that.
That's interesting. Yeah, because I think, people talk about community all the time and what's the community behind and how
Mm-hmm.
diamond-handed is this community. And I think there's a lot of ways that you could measure that. Some that are, very subjective and can be looked at by data. Some probably less so by, Discord activity or just kind of a more subjective feel. Are there any metrics that that you have noticed are strong predictors of a sustainable community?
GMI ends up being pretty decent in predicting or sort of
Interesting.
identifying strong communities. I think there's especially amongst the blue chips, there's a strong correlation between sort of um, Twitter following and prominent collections, and those two lend themselves to make observing or identifying strong communities somewhat easy. People who are influencers on Twitter, especially in the kind of crypto Twitter space, um, holding collections means something for the kind of movement of those collections. And then there's deeper things that you can start to identify as well in terms of community stability, how contingent this community existing for this collection is on a single person or a small number of people versus communities that are more well distributed across a number of actors or people to predict, I guess, like the stability of those movements. If this one person were to leave, what does that mean for the composition of the community, and start to walk back price predictions from that observation. So there's a bunch of interesting
Mhm.
observations or analyses you can run on communities like this.
Yeah, and I imagine there's a lot you can look at in terms of past behavior of large holders, and especially as the NFT market becomes, I don't want to say more institutionalized, but we run an NFT. There are NFT funds out there that
Yeah.
that you know at some point in time is going to have to liquidate
Hmm.
to close the fund and return to shareholders. So in some ways, I think those are good owners, but at the same time, they're not going to be. They have a shelf life.
Yeah, exactly. Yeah, and I think it's about trying to identify signals that point that reveal those types of behaviors early on. It's not always easy, especially given the nascency of the space. But
Hmm.
historical activity can be indicative of future activity, and so we try to glean whatever insights we can from that.
Interesting, interesting. And how do you think about one thing I looked at was and the predictive nature of it is just kind of like looking at various traits, especially when you have um, so say an NFT gives you a specific right, and there are tiers of that right. But then because it's a PFP, everything has traits which don't actually equate to the economic utility you're receiving, but they still might be more desirable for whatever reason, right?
Hmm.
Do you guys ever look at, okay, well, what does this NFT actually do, or is it just purely based on the data and kind of what ends up happening?
Yeah, we look at what the NFTs actually do. Oftentimes, there aren't many sort of utility-laden traits explicitly defined in the metadata.
Yeah.
A few like exceptions here are like sewer pass or art gobblers, where you have multipliers determining how much goo you can produce or stuff like that. But for the most part, it's about creating this comprehensive perspective on the trait space of different collections and also creating additional traits that aren't defined in the metadata, that
Hmm.
may be meaningful sort of mimetic or cultural artifacts people are making buying or selling decisions around, and then observing the market activity from that level of abstraction, from the kind of like trait based perspective, as opposed to looking at each NFT as individual. And then you can start to create sort of relative valuations across traits or different combinatorial trait spaces, or like glean some insights and uh, start to estimate prices accurately from there.
I think it makes a lot of sense. Yeah, and over time, the more data you have, the more it'll kind of prove that is true. Because I think about some NFT project that I'm involved in more prominently personally, and there are utilities or rights or things that come along that were announced on the fly, and they wouldn't be written into the metadata of the NFTs, but everyone in the Discord now knows this, and it's going to be reflected in the activity around that NFT, and then your data will pick that up, and
Exactly.
over
Yeah.
time, it'll just become more and more clean. Well, it's super interesting. I mean, who do you think who do you see Upshot as kind of competing with? I mean, I look at like a Mintify or like a pure kind of more data oriented platform. Obviously, there's things that you guys do that are very different
Hmm.
there, but or is it so how do you look at kind of the competitive landscape of data in this space?
I think there's a fairly small number of other NFT valuation platforms, and those are, I would say, the sort of exhaustive list of competitors that are kind of like what you would consider a direct competitor. I think we differ from other data providers substantially in that a lot of data providers are um, creating kind of nice structures or formats for on-chain data and revealing sort of data that is available from various sources into a really easy to consume format, and via easy to integrate with channel. And what we're really focused on is using kind of quantitative or ML driven methods to glean insights from that data that may not be immediately obvious or available via the underlying data sources themselves. And to that end, I think that's where we exist in the kind of competitive landscape. It's these other NFT valuation platforms that are kind of competitors, as we vie for the spot of being the kind of price oracle for NFTs, backing a lot of the new DeFi infrastructure that's being built around them.
And do you see yourself building exchange capabilities as well?
Yeah, there may be some stuff coming out about that in the next uh, like couple of weeks or month-ish. But yeah, we're trying to figure out productive ways now to move beyond the appraisal being a reference point and a data point that can feed into others' strategies interacting with these markets and other financial primitives, and turning that into tangible spot market liquidity itself, making the appraisal act like even more representative of what one can get on the open market
Hmm.
for their NFT. And so we're working on some kind of interesting experiments in the DeFi space there that we'll be pushing out some more information around in the next couple of weeks.
Interesting. Yeah, it's a very logical progression of what you're doing. So that's super cool. That's definitely definitely going to be a user of the platform going forward. It's I like it. I think it's very simple. It's upshot.xyz for those listening. I would definitely recommend that everyone check it out. Yeah, one final question, and I'm curious because I think you look at this in a very logical, I think, and bright way, which is frankly very refreshing compared to a lot of people in the industry. But if you had a if you ran across you know say like an Elizabeth Warren type person
Mm-hmm.
and had to explain kind of NFTs to her and viability that, beyond just pure speculation and fraud in her mind, like how would you frame that to her?
I would probably I probably won't get into the word for word explanation here, but I'd probably
Of
frame it
course, of
in
course.
the sort of like broader lens of DeFi being kind of new substrate for unlocking novel types of financial interactions and spurring kind of greatly kind of expedited financial innovation and experimentation, and NFTs being the vehicle by which we're able to I guess catalyze a lot of that. I don't know if catalyze is a word, but anyway, um, kind of fuel a lot of that innovation in the DeFi space. DeFi
Yep.
is significantly limited to the types of assets it can build new financial infrastructure and new financial innovations around, and NFTs are what unlock the remaining kind of 95% of primitives that can exist in DeFi and can unlock unique value in DeFi, but DeFi can't today because of its limited asset set.
Do you have favorite NFT projects that you
For
follow
sure.
or okay?
Have you heard of
Yep,
crypto dick butts?
I have.
I have to say, crypto dick butts is the number one, and there's not even a close second. It's backed by such strong fundamentals. The math backing the collection is so sound, so airtight. One dick equals one butt. Um, we're on a very simple mission to return to Gooch Island to purchase an island and allow our dick butts to return to it. Yeah, I would say dick butts are the number one NFT collection. It's not even a second.
Okay, I didn't think you were going to go there, but I like it.
Yeah,
I can't say that I own any myself, but I've never looked into them, so maybe I'll have to right now.
you should definitely purchase a dick butt. Join the journey back to Gooch Island with us.
Never been there, but I hear it's
No,
nice.
no, people haven't been there in a while. The dick butts were exiled from the island, and now we're trying to get them back. So
Who lives there
yeah.
now? Anybody?
No, not that we're aware of. We have to purchase the island still. So once we purchase that, we'll see if there's any current inhabitants. I guess.
Well, who owns the island?
We have to buy it. That's the whole that's the whole goal of the collection. The Dickbutts have been run off their original island, and now we have to build up enough money to purchase a new island for the Dickbutts to find solace and find home in.
Okay, well, I'm gonna have to look this up because
Yeah, you should get into
I was
Dickbutts for
not aware
sure.
that there was a whole story around it.
It's about
But
three
yeah,
sentences as defined in the Dickbutt collection, but we've taken some liberties
like
in
the
expanding that lore.
community is
Yeah,
expanded.
yeah.
Is this all in the Discord,
Yeah, it's in the Discord. It's in various chats. Dickbutts have,
Telegram groups and
again, going
stuff?
back to the community thing, a very, very strong community, which speaks to
Yeah,
the sort of potential continued success of the collection.
mathematically sound.
Yeah,
Okay.
mathematically sound. One dick equals one butt. It never depegs.
Beautiful, awesome. Well, it's a good it's a good one to end on. But Nick, I really enjoyed the conversation. I mean, what you're building is really incredibly interesting, and I think I'm excited to see how it grows and along with this market. So thanks for your time, and just let everyone know how they can find you and follow you and learn more.
Yeah, thanks for having me. Yeah, if people want to learn more, they can head to upshot.xyz. That'll have all of the links to Twitter and whatnot, and that's the best place to get started playing with the app, get started with the API, whatever you're kind of interested in. So yeah, upshot.xyz is the best place to go.
Awesome. All right. Well, thanks for the time, Nick.
Yeah,
Talk soon.
thanks.